Welcome to a new video in which we're going to discuss altcoins, as altcoins have been seeing a pretty harsh start of the weekend, granting you massive opportunities you should be looking at. That's what we're going to discuss in this video. But before we are going to continue, subscribe beneath so you can stay tuned to all the content that's coming out of this channel, and there's much more to come. What did we see in the past 24 hours? We did see Bitcoin making a slight correction, causing altcoins to drop significantly. And those drop downs gave some cascade of liquidations or stop loss triggers, as e-gold, for instance, crashed with 60%. That is just through thin order books. But still, those retests grant you massive opportunities. And if you remember, we have been discussing Cardano about 4 days ago, in which we said the upwards run ran towards the 1.618 Fibonacci level. This is currently not an entry point. You should be looking at potential dip opportunities, in which we can derive those dip opportunities based on a daily time frame, confluent with the Fibonacci retracement or extension tool, whatever you want to use, and the 4-hour confirmation on the daily time frame. As we can see in this chart, the previous area of compression, the first area of support, is derived from this block here and the 6.5 and 6.18 Fibonacci level. If you reverse, it's the 35382. Doesn't really matter too much. So the first real higher time frame level is this zone around 70 cents. And what we can see is that once something starts to drop, and I'll just zoom in a little, when stuff starts to drop, you can see this downwards trend, lower highs, lower lows, and then the support is lost, acceleration downwards, as there is not many support levels in between, causing the price of Cardano to test the previous level of support for support. Now the question becomes, or the point becomes here, is that people often seek for exits when stuff starts to drop and for entries when stuff starts to run. Well, when something starts to run vertical and goes to like 85 to 95 cents or even higher for Cardano, that should be your trigger that you're going to partially take profits. You don't have to take profits for the entire trade, as you don't know where the top or the bottom is going to be. So you want to scale in, scale out, which means taking gradual partial profits for your portfolio or for your trade, through which you have flexibility and liquidity to buy the dip. And then when something starts to drop, especially in a bull market, you want to use that liquidity to accumulate more towards your trade stack. So for instance, if you closed a quarter of your Cardano swing trade and you're able to use that liquidity, you were able to use that to buy it 40% lower. So you can accumulate more Cardano for a cheaper price. Also, the next part is, if you want to start taking that trade, or if you want to look for trades for Cardano and you want to look for higher time frames levels, then those zones are also your entry points, as when you're going to enter a trade in this region, your stop loss is somewhere here, your take profit might be somewhere here, which makes it a very minus EV, minus expected value trade to go for. While if you're using the previous price action and price points to derive entry points, you can use or optimize your buying strategy by looking at previous confluences or compression periods, as when you take the trade here, you're going to look for maybe a stop here, otherwise around in this zone. Your take profits are in this region and in this region, which makes it a plus EV trade. As you can see, the risk reward in the worst case is 1.9, then 2.4, and if you do it like this, it's around 4, which is way better than taking the trade here, looking for a take profit in this region, which you stop around here, as that is the usual stop you should have in this case. That makes it a risk reward of 0.53. So reverse your mindset. Understand the mechanics of a market in which markets also use downwards tests. This is a very harsh correction, but we come back up very fast, heavily depending on Bitcoin as well. But you should be deriving those entry points based on historical price action to accumulate your positions. And that is something sometimes in a very fast manner. Also, Cardano hit this first level. What is next to occur on Cardano, I simply don't know. We are currently watching how the market is going to develop from here. Daily candle looks extremely bullish as a bottoming candle, which means that we might be getting a copy paste of this structure here, in which we're going to have some sideways action. The Bitcoin pair of Cardano is looking similar as well. We reached the 1.618 Fibonacci level as well, as far as I know. Yeah, we did. That region is hit. Now we are retesting the previous highs here for support. Most likely are going to consolidate a little more, but the eyes should be a bit more towards Bitcoin and towards Ethereum, as Bitcoin and Ethereum are the levels to watch. Also, we have stated that Bitcoin reached the 1.618 Fibonacci level. We've been tweeting that. And now we see a small breakdown. As you can see, the structure is still heavily bullish. But there are some levels that we should be watching. So for instance, if this range around 46.2 is lost, I'm assuming we are going to see a retest of the region around 43.5. So this is the crucial level on the downside now. The main and primary one is this region. If that is lost, I'm still assuming we go here, and then we have a further and heavy crash or correction on the altcoins as well. On the upside, as long as 46.2 is holding up, I want to see a clear breaker above this region between 48.5 to 49. If this region breaks to the upside, we can start accelerating once again. However, if this doesn't, this previous resistance zone that we used to have confirms for resistance again, then this small period is becoming a fake out, and we are likely to test the range low of this range construction. So this area is where I'm looking at with a valid bearish divergence indicating such. Given that there's such a downwards momentum is going to cause pain across the markets, I'm assuming that the Bitcoin dominance chart will go up, given the fact that altcoins will drop more heavy than Bitcoin, causing the Bitcoin pairs of altcoins to drop heavily. We've previously constructed levels to watch on Ethereum as well, and we said we have to hold this level around $1,700 if we want to sustain bullish momentum. Otherwise, I'm going to look at this region or even the region around 1400. So we broke this trend. This is an example of what I just discussed. Fake out, rejection of previous resistance, breakdown. Now we broke down towards 1690, and now we are looking at a similar construction. So whether we are going to break through this region around 1800 to 1840, if that happens, we are going to accelerate towards 2K and plus. If that doesn't happen, another test of this region is likely going to occur. And if that fails to hold, I'm assuming we're going towards $1,550. Then there's also a case of altcoins in general, what they are doing. Chainlink also, you can use those to derive levels. I'll just use the clean chart so you can actually see what I'm saying here. Chainlink, if you see such an expansion based on the daily time frame, this is your first entry point. And if you're looking or waiting for those to hit, they would grant you massive opportunities or massive profits, as those downwards wicks are often quite fast and quite painful. So you're not looking for entry points based in this upwards run. You're going to look for previous price action levels to derive those entry points. And if you use this chart for a confluence or for just simply experimenting with yourself, you can see it. OB becoming support, previous high becoming support, OB becoming support, and now we simply flip further. Another support resistance flip, another support resistance flip. So you can look at an entry point here as well. If this point is lost, you're going to look at way further, so then you're probably going to look at a retest in this region, etc, etc. But the conclusion of this video is, if you want to look for entry points, use historical price action, avoid FOMO, start scaling out when something goes vertical, start scaling in when there is a correction going to occur to accumulate your positions. I'll be back tonight at 8 p.m. Central European time with a live stream. Subscribe to the channel, and I'll see you soon.